Everyone watching the news right now is building a case for why the housing market should be falling apart. Inflation won't come down, the Fed is not cutting rates, there's a war driving energy prices through the freaking roof right now, and the crash crowd is louder than it's been in years. That's the story the headlines are telling you, but here's what the actual data says. Right now, there are more than 400,000 homes under contract nationally. And that number is running ahead of where it was at the same point last year. So is the market actually as fragile as everyone thinks? Or do you think buyers who are still moving right now know something the people on the sidelines don't? All this and more covered in this week's San Diego Market Matters. And I'm Karl, your San Diego Realtor. Now, real quick, if you haven't liked and subscribed yet, feel free to do so now, or you can wait until the end of the video. Either way, it's appreciated. Now, let's dive into the data. Let's start with the number that drives a big portion of this conversation. That's the 10-year Treasury. Most people never really even pay attention to this, but here's the simple version laid out for you. It is the engine under the hood that moves mortgage rates. When this number goes up, mortgage rates tend to follow. When it comes down, rates tend to ease. It's not the mortgage rate itself, it's what the mortgage rate is built on top of. The 30-year fixed mortgage rate closed out April at 6.44%, but where it finished is not the whole story this month. It's what happened along the way. April started with the rate around 6.47. Through the middle of the month, it actually dropped down, hitting about 6.3% around April 19th. For the buyers who had been watching and waiting, that was a real window. On a $700,000 loan, the difference between 6.47% and 6.3% is roughly $75 less per month. For a buyer already stretching to make that number work, $75 a month really matters. As a matter of fact, at the Padres game, you can get yourself 2 sandwiches, a Coke, some chips, and a Pacifico for about $75. So there's a date night once a month for you. Then April 29th arrived. The inflation data came out worse than expected. Hours later, the Fed held rates again. The 30-year shot back up to 6.52 before settling at 6.44 to close out the month. The window opened in the middle of April and closed almost as fast as it appeared. Now, here's something that most people don't think about when they're looking at mortgage rates. The 10-year Treasury is kind of like the wholesale price. It's what lenders use as their starting point. Your mortgage rate is what you pay at the register. The difference between those two numbers is the lender's markup. In the mortgage world, we call that the spread. Right now, that spread is sitting at 1.93%. Historically, it runs around 1.7, so lenders are still charging a little above average. But here's the context that matters. Back in 2024, that markup was about 2.5%. That's when we were seeing 30-year rates at 7.5%, and buying a home felt nearly impossible for most people. We've come down a lot from there. And here's why this number matters to you as a buyer. Even if the 10-year Treasury stays flat, your mortgage rate can still come down if lenders shrink their markup. That's quietly happening right now. Now, mind you, it's not dramatic, but it means buyers are getting a little more relief than they'd get just from watching the 10-year Treasury yield alone. Most people aren't tracking this. You should be. Now, here's something that tells us whether buyers are actually responding to all this. The Mortgage Purchase Application Index. Think of it as your weekly count of how many people are actively applying for a loan to buy a home. Not to refinance, specifically to buy. Right now, 2026 is tracking meaningfully higher than where 2025 was at this same point in the year. This is a buyer confidence signal. Rates are still near 6.5%. There's a war, inflation is still elevated, and people are still raising their hands and getting pre-approved to buy a home. That tells you something important about what buyers are thinking. They're not waiting for the perfect condition to come about. They are moving in the conditions they have before them. Now let's look at national new listing data. New single-family listings came in at 83,395 for the last week of April. That is a new April high, running above where we were at the same point in both 2024 and 2025. And here's the thing to keep in mind. Listings are typically going to peak in June. We're not there yet. More inventory is coming, not a flood, at the same time, not exactly a drought, but sellers are clearly coming to market, and that trend is likely to continue through the spring and into the summer. More listings hitting the market might sound like it's great news for buyers, and it is a little, but here's the twist. Despite more homes coming to market, sellers are actually cutting their prices less than they were last year. About 1 in 3 homes nationally has a price reduction, sitting around 34%. At that same point in 2025, that number was closer to 37 to 38%. Fewer price reductions means sellers have less pressure to negotiate. The window where buyers had more leverage and sellers were cutting to get deals done, that window is getting smaller. So price it right and it moves. Overprice it and it's gonna sit. And buyers are still showing up. Right now, there are approximately 407,000 homes under contract nationally. That number is running ahead of where 2025 was at the same point and tracking right in line with the 2024 numbers. People are buying homes. It's very clear in the data. Think about what it takes for that number to exist right now. Rates are near 6.5%. Inflation just came in at over 3.5%. There's an active war in the Middle East. Every other headline is warning about a market correction, and still 407,000 homes are under contract. The buyers in this market are not casually browsing Zillow. They're motivated and they're moving on properties. Now let's look at the national inventory. There's approximately 765,000 single-family homes for sale nationally right now. That's about 5% more than there were this same point last year. Here's what makes that number more interesting. New listings hit an April high this month. You would expect that to push total inventory up significantly. Instead, it only moved about 5% year over year. What that tells you is that buyers are absorbing the new supply nearly as fast as it's coming to market. Every time a home hits the market, someone is moving on it. There's no pile up building here, at least not right now. Bottom line, the story this month is simple. It's resilience. The market absorbed a hot inflation print, a third straight rate hold, rising energy costs from the Iran war, and a Federal Reserve in the middle of a leadership change. The demand held through all of that. And this most recent meeting in April was more divided than any Fed meeting in over 30 years, with the committee unable to even agree on whether future rate cuts should be on the table at all. Markets are now pricing in no cuts for the rest of 2026 and into 2027. Buyers waiting for rates to come down significantly are likely gonna wait for a while. The buyers who are moving right now understand something the sideline crowd doesn't. Prices are not falling. Inventory is not flooding the market, and every month spent waiting is a month of equity someone else is building. The market's not frozen right now. It's not crashing at the same time. It's just slowly grinding forward. Sustaining is probably the perfect word for it. With all of that in mind, at what point do you think something has to give? Do rates eventually win and demand cracks, or does this market keep grinding forward no matter what? Let's hear what you think about this topic in the comments below. And that's a wrap for this week's San Diego Market Matters. If you haven't liked this video yet or subscribed, here's your last chance to do so before the next video comes on. Thoughts, questions, and concerns, don't hesitate to reach out. As always, I'm Karl, your San Diego realtor. I'll see you in the next video.